In a blockbuster showdown straight out of Hollywood, Netflix, the streaming giant that changed how the world watches entertainment, has just placed the biggest, boldest bet in modern media history. And the impact? Wall Street is shaking. This is not a routine owning story. This is not a minor acquisition. This is a high-stakes, $70 plus billion power grab that could permanently reshape the global entertainment industry. Netflix has gone all in. An all-cash offer. No stock swaps. No half measures. A stunning bid valued somewhere between $72 and $83 billion, aimed straight at the heart of Warner Brothers Discovery. Cold, hard cash, designed to crush uncertainty, silence doubt, and outmaneuver rivals before they can even react. Executives close to the deal say this move is about speed and dominance. Netflix doesn't want delays. It doesn't want drawn-out negotiations. It wants certainty. That's why the company is offering roughly $27.75 per share in cash, a dramatic shift away from earlier stock-heavy proposals that could have collapsed under market volatility. Netflix shares have been swinging wildly, and Netflix knows it. Cash removes hesitation. Cash forces decisions. But this is no one-horse race. Paramount has entered the arena, and it is not backing down. Backed by billionaire money, private capital, and deep political connections, Paramount's rival offer targets Warner Brothers Discovery with aggressive intent. In pure cash terms, Paramount bid threatens to outmuscle Netflix, igniting one of the most brutal corporate battles the media world has seen in decades. Behind closed doors, this has already turned ugly. Proxy fights, legal threats, boardroom warfare, advisors, bankers, and lawyers working around the clock. Shareholders being pulled in opposite directions. This isn't business as usual. This is corporate blood sport. Investors are watching nervously. Markets hate uncertainty, especially when tens of billions of dollars in massive debt financing are involved. Netflix's stock has reacted accordingly, volatile, unpredictable, swinging between optimism and fear. Bulls see a once-in-a-generation opportunity. Skeptics see a financial minefield. Supporters argue that owning Warner Brothers' legendary intellectual property, from Batman to Game of Thrones, from decades of film history to global franchises, could transform Netflix from a streaming service into a full-scale entertainment empire. A content superpower with unmatched reach, libraries, and cultural influence. Critics, however, warn of the dark side. Massive debt, integration nightmares, cultural clashes, diluted focus. They question whether Netflix can absorb such a colossal machine without sacrificing margins, innovation, or creative agility. Some even warn that this deal could haunt Netflix shareholders for years if execution falters. Adding to the tension, Netflix stock has underperformed several major tech peers over the past year. While earnings have beaten expectations and fundamentals remain solid, investors note that Netflix lacks exposure to explosive themes like artificial intelligence, trends that have driven massive gains elsewhere in the market. The concern is simple. Is Netflix betting on yesterday's power or building tomorrow's dominance? Yet the core business tells a different story. Netflix continues to grow. Revenue is climbing year over year, driven by strategic price adjustments, a rapidly expanding advertising business, and blockbuster content that still commands global attention. Recent quarters delivered double-digit revenue growth, strong engagement metrics, and improving profitability. This is not a company in decline. It is a company evolving. And that evolution is deliberate. Netflix is no longer chasing subscriber numbers at any cost. The focus has shifted to revenue quality, diversified income streams, and long-term margins. Wall Street appreciates a discipline, even if the growth narrative feels less explosive than in the early streaming boom years. Now imagine the implications if this deal succeeds. A combined Netflix-Warner entity could control an enormous share of global streaming consumption. Decades of film and television history. Iconic franchises. Creative pipelines stretching across continents. It would signal a new era, one defined by consolidation, scale, and ruthless competition. Smaller studios would struggle to survive. Rivals would be forced to merge or fade. But the road ahead is anything but clear. Paramount's hostile tactics, potential shareholder revolts, antitrust scrutiny, and regulatory backlash loom large. Governments will ask hard questions. Competitors will lobby aggressively. Every step forward will be contested. One miscalculation could derail the entire strategy. So the question remains, will Netflix emerge as the undisputed ruler of modern entertainment? Or will this colossal gamble spiral into one of the most expensive mistakes in media history, dragging Netflix stock down with it? One thing is undeniable. The streaming wars have entered their most dramatic, most dangerous chapter yet. Billions on the line. Power is shifting. And the world is watching, frame by frame, deal by deal, moment by moment. Don't forget to stay updated with all the latest trends on Google Trends, so you never miss out on what's trending right now. And please, make sure to subscribe to our channel. It's the best way to stay connected with us for more exciting updates and breaking stories. Thank you for watching, and see you in the next trending update.